Sure. Yeah, my name is Henry Jeans with Sterling Bank and Trust. I'm a regional sales manager now for the Los Angeles market for Sterling, for our branches down there. Been with the bank about 15 years and been doing TIC financing for pretty much all of that time. For many, many years in San Francisco as the market solidified, especially after 07, 08, and 09. To kind of where it is currently. And but in the last 5 years or so have been spending a lot of time in other markets around California, outside of San Francisco, where tenancy in common is really taking hold and expanding quickly for a lot of the same dynamics as it did in San Francisco. And it basically allows for more affordable housing in terms of more property for your money. And so comes
it's like our whole thing is you just get more bang for your buck. You get more established locations, because if you go in and do newer construction, they tend to be on like transportation corridors and on the edges of neighborhoods, whereas with TICs you're getting more charming buildings that are in the center of neighborhoods and
where people want to be
a lot bigger. Yeah, beautiful time. So hey, let's talk a little bit about Beacon and how the process would look. So Beacon is unit number 4 at 636 Beacon is listed for $659,000. If somebody was interested in that property, what would kind of the process of financing with Sterling Bank look like? Do you guys do 10%, 15, 20% down? What's the
we do cover is up to 90% financing. Beacon would definitely be eligible for that. So basically the process would be to begin to make an application and go over rates and programs. Kind of a quick overview on our TIC, our fractional TIC rates and programs. It's mostly ARMs at the moment. We do have a couple new programs as of this week, a 7-1 and a 10-1 ARM. Rates are, we now have a 10-1, it's exciting. Rates are going to be in the 3.6 to 3.75% range there. And we also have another new TIC loan program offering from last week, and that is a 15-year fixed at a rate of 3.5% in the greater San Francisco market. And that is amortized over 15 years, but it's a new program. It's very exciting. There haven't been very many fixed programs yet in the TIC market, so Sterling was excited to be able to come out with that very recently.
That's amazing. That's fantastic. So, and so in general, how long is the process? If Pretty is the loan officer that does a lot of the Bay Area stuff up here, so we would be introducing people to Pretty. And then if they were to connect with her, how long to kind of get up to speed as far as what they need to do is going through the application process?
Right. Yeah. So Pretty Chatwani is great. The general process is going to be just to start by completing a standard 1003 application that the loan officer will send out, and then send that back with supporting income asset documents. That will give us, within a day or two, we'll be able to at least get an overview of the file, and on a pre-qualification basis, we can then usually assist in generating a letter, an offer letter. The file itself, however, then should
take a couple of weeks if they were to kind of get into contract or whatnot.
Exactly.
You could actually get somebody pre-approved and ready to make an offer within 2 days, if by the sounds of it.
Within a couple of days. Now, it's going to be a pre-qualification based on a complete overview of their financials. It's not going to be a full underwriting. That would then come next. If the clients ratified, the file would then be prepared for full underwriting. These are portfolio loans, and so our underwriting process tends to be more manual and a little more thorough than you would find sort of in the standard conventional market. So timelines then I would expect would be around 17 days for a standard financing contingency. Anywhere 17, 21, depending on the file complexity. Appraisal should also be able to be back during that time. Certainly for a market for this location in Oakland.
So ultimately, no difference between buying a condo and buying a TIC as far as timeframes go.
No, it's about the same. I mean, it's maybe a little, you could say it's a little more slower on the TIC side. It is, again, a more manual process, but we follow, these are essentially conventional loans underwritten according to all the same standard Fannie Mae guidelines that exist across the country. So TIC loans are not something that different or exotic, but they do go through a pretty thorough review. It does take a little bit more time. And, you know,
but that's the beauty. I think that's the beauty of TIC kind of buildings and TIC financing. You get very well qualified buyers who get into them, and so you get a collection of well qualified people who care about a building and want to look after it and stuff. So.
Correct. There is kind of a lot of times in TICs, you could say that there's sort of an additional incentive for financial, how should I say, for everything to run as smoothly financially as possible within TIC communities. And I think a lot of the TIC buildings where effectively the co-tenants are the HOA, they're running the affairs of the building. They don't want anything to happen. They don't want bills to go unpaid or anything to fall into arrears that would then, you know, pose a problem. It helps, you know, sort of maintain the value of the property. And I think you'll find in TIC communities, there's sort of an even higher level of that because of the nature of ownership. So
which is great. And then, so in general, the rates in comparison to purchasing a condo, they are a little bit higher because it's a portfolio loan. But
correct.
The trade-off is really the fact that you're able to buy the property that's going to be less normally than the cost of a condo. And so it's kind of like it's a trade-off, and it's one that it looks on the face that it might cost a little bit more money because the rate, but actually in the cost of ownership, your cost of ownership ends up being cheaper.
Yeah. There's sort of a trade-off, a balancing sort of a process that you have to go through with the TIC, kind of the pros and cons. The financing has always been one of the parts that's been hard. You have to be comfortable being in arms. Now there's a couple more options, and rates really aren't so bad, but they're a little bit higher than the conventional market, but it's offset by what you're getting for your money. So in other words, the amount of property, comparably, the types of properties, and really for a lot of people, it's really even just being able to even get into the market at all in a lot of cases. This has kind of certainly been the case in Los Angeles, but we've also definitely seen it in Oakland and in San Francisco, whereby for a lot of buyers, the only way they can get into the real estate market is through a tenancy in common. And oftentimes it is the perfect fit.
And it's
so
beautiful with a
10%
down. If somebody's coming in with a 10% down, they're very well qualified with a good job, and they just have the 10%. There's no mortgage insurance or anything like that. It's just
no, there will be. So that's a good question. Just let's talk about the structure on a 90% loan. So for a borrower who goes all the way to 90% of purchase price, there would be an additional private mortgage insurance payment on top of the standard rate. Now the rate won't change. If you're financing 75% or 90, your rate is still going to be 3.6 or 7. It won't change going to 90, but you will have that additional private mortgage insurance payment. I would estimate around $150 or so a month. That's what we're seeing.
Okay.
And then it's a matter of managing that in the future. It will either eventually, it takes several years for it to go away by itself when the equity is there. Otherwise, it can be refinanced off, but that's the only difference.
Beautiful. And then what about fees and stuff like that? Any difference in the cost of an appraisal for a TIC? Any other special fees that one has to pay?
Right, not so much. No, appraisers are, it's kind of a standard appraisal just for a TIC. No other fees. I mean, we have our underwriting and processing fees. Most of the rates are usually quoted. Now, our rate sheet has a 1 point, a half point, or a 0 point rate quote option to it. So borrowers can basically determine, what rate they want to be in relation to cost. So there is a way to manage that for borrowers. Most of the time, it seems borrowers,
great that's a good option for borrowers. Like if somebody's going to be like, hey, we're only going to be around for 3, maybe 4 years,
Right,
so we'll do
right,
this option. Where if you have somebody who's like, hey, we're going to be here for 10, 12 years, it might be
right.
better for them to do the higher closing cost to get a lower rate. So
Correct, right.
yeah,
Depends on the horizon.
the horizon.
So,
Beautiful. So this is awesome. So, and just to give people a sense of just how big this TIC world is, do
mhm.
you can you give me any sense of like how many of these loans Sterling does a year, and you're doing them in LA, and you're doing them in the East Bay, Oakland, and
Right.
doing them in
And
San
it's, yeah, I mean, it's
Francisco?
starting to happen up and down the coast too. I'm getting calls from Santa Monica, not Santa Monica, I'm sorry, Santa Barbara, Pismo, I mean, up the coast too. Any community where, you know, housing is at a premium, along coastal areas, especially where condo zoning might be very restrictive, that's going to lend itself to TIC financing. How many we're doing? I mean, you know, it's hard to say. You
You do a
know,
lot. You
we
do
do
a
a
lot.
lot.
So
Yeah. I mean,
yeah,
we're trying to
yeah.
close what we can, and it's, you know, there's at least maybe now 150 established units in Los Angeles after just a few years,
Wow.
that we've had a big role in
Wow.
that market as it's really kind of really taken off. The San Francisco market, as you know, is very established. I mean, I think there's
Super
thousands of
established.
units there by now.
Yeah,
I don't.
yeah, yeah.
And I do
Totally.
feel like Oakland is just beginning to kind of realize the benefit or the value
Yeah.
of TICs, and sort of how to approach this in a way that, you know, works for Oakland. But I think a lot of the same dynamics are definitely there. The
Yeah.
types of buildings are certainly there in Oakland as well that lend themselves to TIC
Totally.
ownership.
So
Um,
how do we find you if we're looking to get in contact and we want to take the next step and get pre-approved? What's the best
sure.
option?
Best option is probably to email me at Sterling Bank. So I'm hjeans@sterlingbank.com. I do travel quite a bit up and down. So the Noe Valley branch, and actually really a lot of our branches are a good place to call to find a TIC loan officer as well for the San Francisco market. And we do have an Oakland branch as well that has TIC loan officer in it as well.
Beautiful.
So
And then of course, people,
sterlingbank.com.
sterlingbank.com, Sterling Bank. And then
Yep.
of course, people can just reach out to us and we'll connect them with
Yep.
our, yeah, we'll connect them direct into Preety and get them sorted out. So this has
Yep.
been awesome. Thank you so much
Okay.